Hey everyone, I'm your instructor Arman. This is course module 1, Market Foundations, Understanding Price Structure and Trend. So before we start throwing indicators on a chart or chasing entries, you need to understand one simple thing, how price actually moves. So what we're going to do is, we're going to see how everything in trading is handled, in terms of breakouts, reversals, pullbacks. They all come back to one idea, and that's structure. So in this lesson, we're going to break down how to identify a trend, what market structure means, so higher highs, higher lows, lower highs, lower lows. We're going to recognize impulsive versus corrective moves, so how the psychological aspect of how price moves in waves, and we're going to understand how to spot when a trend is likely to continue or to end. So market moves in waves. There's an impulse, so it goes up. There's a correction, so when price goes down, and then there's another impulse where price goes up. Or so that's usually how market goes with like this chart right here. There's higher highs and higher lows. That means there's an uptrend. So right here, this would be an example of an uptrend. And lower highs and lower lows is downtrend. And then sideways movement is usually called consolidation or range. So trends, they usually start from crowd behavior and trader sentiment. When buyers dominate, we get higher highs. So as price rises, more traders jump in until the smart money starts taking profit. That's when we see pullbacks. Those pullbacks are not random, they're often where new buyers enter. So buyers who are either top blasting, buying at the top of a move, and that's why as a trader you never want to chase the move, you want to position during the correction and riding the next impulse. So in order to draw market structure, you can take any chart you see, preferably a 4-hour time frame chart for clarity. You want to mark your swing highs and your swing lows, and then you want to ask yourself and see visually, are those highs getting higher or are they getting lower? And then you want to draw a trend line connecting the direction of the move. So if the trend line breaks, that's your first clue of possible structure change, but the structure shifts before trends reverse, so we wait for confirmation. So right here, I have a marked out chart showing a swing high, what I would deem a swing high. There's even smaller swing highs here visually and smaller swing lows, but I'm showing you the bigger movements. So this is from the Bitcoin chart. This is a daily time frame for each of these green and red candles, but you'll see visually there's a swing high, a swing low, another swing high, and another swing low. And when you draw trend lines, you want to have the trend line showing the general direction of the trend, right? So you see this line aligns close to the top wicks of these candles on the chart. It like crosses some wicks. Everyone draws trend lines differently, but you'll see that this is a downtrend. Sorry. And then for this, you'll see that this is the uptrend. And it's an uptrend because it's consistently making higher highs. So this would be a high, and this is would be a low, right? So we have this. So we have lower highs. Oh, I mean higher lows. Sorry, you get those mixed up. We have a higher low and another higher low and another higher low and higher highs. So this high and then this high is higher than the previous high and this high is higher than the previous high. So these would be swing highs, swing lows, right? So this is how you determine an uptrend. And you see whenever this trend line is broken, it starts to rally and become more bullish. And bullish means you believe price is going to go up over time. And when you're bearish, like this is bearish right here, means that price is going to go down over time and market conditions aren't very favorable. But they're very good market conditions in order to position yourself for future long-term uptrends so you can capitalize on price difference. So right here, we're going to talk about breaking structure. So I spoke in the previous slide about trend lines. So right here, this is a consolidation range that Bitcoin went under. So you'll see that price fluctuated in between these two bars. And after it broke out of this price range, it ended up being bullish. And it's kind of had pretty violent momentum up. So whenever you see a break of structure, that's a very good time to position yourself for a move. Either longing the market, where you're predicting the market price is going to go up, or shorting the market, where you predict market price is going to go down. And you'll see that these are support areas. So support areas means, or this would be a resistance area. So excuse me. So top of the candles, they're resistance means that price likes to push down every time it reaches this number. So you'll see here, price pushes down, goes up, here, price pushes down again, and you'll see that this happens multiple times, right? So that means that price doesn't want to go. There's more sellers at this level than buyers, so the sellers are taking over, and they took over up until this point where buyers wanted to enter and push price back up. So this slide is recapping support and resistance areas. So areas where buying previously pushed up price, resistance area where selling previously pushed price down. You want to look for multiple reactions, and those are the key levels. So if you go back to this slide, you'll see that this is a key level right here where price wants to push down. And then you can help use support and resistance zones to anticipate reversals or breakouts. So this is the recap of this module. Structure reveals market rhythm. Trends reflect crowd behavior. You want to trade with structure. You don't want to trade against it. And then the next module is going to be breakouts versus ranges. So I have some homework assignments, some free PDFs that you could download if you'd like. You want to find 3 uptrends, 3 downtrends, and 3 ranges in any chart you want to pull up and mark up. You want to label some swing highs and swing lows and note structure changes. Focus on reading. Right now, you don't want to be trading anything. You need to start building pattern recognition and understand what charts do and how they react. That's it for this module. I'll see you in the next one.